I'm kind of standing on the shoulders of Citi and making that as the trade setup, because they've got a feedback from a US roadshow with 25 investors, and we all want to know what the FI is thinking, right? So here's the first-hand feedback for today's trade setup from the Citigroup note. So they met with 25 portfolio investors in the US to discuss India's macro and financial sector trends. They found investors to be constructive on Indian macros, not yet reflecting on their India investment positions. And hence, you kind of corroborate that with the fact that, yes, some bit of money is coming, but not all of money is coming. So will money come in now, in the next 6 months? That's the other key thing, right? So towards the end of the year, so to say. They say that signs of urban consumption recovery on the back of fiscal and monetary stimulus could change investor perception. Now, viewers, you tie this point in with what HSBC was saying yesterday, that this time around for FY26, focus on consumption, not as much on capex, and you need consumption to get revived and mark up, because that will drive GDP growth. It's a year phenomenon, but it is there. They say optimism around capex recovery is still muted, and early trade deal with the US, success of China +1 diversification, and robust external sector are the other areas of optimism. So here's Citi, one of the premier brokerages, meeting 25 US investors, which are the largest pools of capital into India and emerging markets alongside Singapore and Middle East, talking about some optimism out here. So I suffice to say, maybe one more reason why I see the glass half full for the second half. Let's wait and watch if some of this, and if there is a consumption recovery, translates into some bit of flows going higher, like we discussed yesterday as well, right, guys? That Venkat of IIFL mentioned that there is a trickle of flows that has happened thus far. Expect a deluge to come in the second half. I love that term.
The deluge of flows is definitely awaited. Even the fact that FDI, and I thought that was an important clarification that Pranjul made yesterday and put it into perspective, because that's something that's been hitting headlines, that FDI in India has plunged by, some 95% over the year. So she's saying that foreign investors across the world are not willing to go out and make plans, because how do you know what's going to happen? I mean, think of a Tim Cook saying, okay, I will make in India, because, China is a problem. And then Trump says, no, even that doesn't work. So how do you plan anything in an environment like that? So that's the overarching factor to watch. But for today and for the rest of the week, let's get specific. Over 200 earnings will be reported today. Watch out for LIC, Life Insurance Corporation. I think that's a big set of numbers that we should watch out for. We've been talking about how the insurance space is finding a new lease of life, and LIC has been buzzing ahead of its numbers as well. The other factor, I don't think at alarm level, let me put it in monsoon parlance. It's not a red alert, maybe it's an amber or a yellow or an orange alert right now, which is the active COVID cases. The number has crossed 1,000 in India. Most of the cases are mild. There have been some deaths reported for people with comorbidities, but that's one factor to watch out for. As far as levels are concerned, Nifty is poised for a potential consolidation with key support placed in the 24,850 to 24,900 zone. A break below this area could trigger selling pressure. Think of it this way, we're poised at a point where we don't know which way the index could move. You could see either way today. If this holds above this support level, a move towards 25,200 to 25,300 range remains likely. This zone may act as near-term resistance, and a breakout could lead to a sharp rally. The bank Nifty continues to trade with a narrow consolidation band of 54,442 to 55,876 seen over the past 11 sessions. Yesterday, the index did approach the upper end of the range intraday. It failed to achieve a breakout though. A close above the 55,700 mark would lead to a retest of the all-time high near 56,100. Resistance at 55,800, support at 55,368. So those are some of the key levels to watch out. But what's all the action in the derivative space? Puneet is joining us for a lowdown on that.
Well, thank you for that. Definitely a very narrow band in trade that we've seen, but one of the key positives was achieving that 25,000 mark yesterday again. While the cues weren't indicating that at the start, there was expected to be again a range-bound session. Yesterday, the GIFT Nifty was up about 100 points before the trade started. Today, it's largely in the 6 to 7 point range. It's not been too much. Currently down 8 points as well, but maintaining that level, of course, goes without saying, will be one of the key levels to watch out for. On the bank Nifty as well, we've also seen a very sharp, cut in open interest specifically for the Nifty 50 futures. As well as for the bank Nifty, though, we've largely maintained that level and seen another cut in open interest for the bank Nifty as well, above the 55,600 mark comfortably, and closing on to that 55,700 mark for the bank Nifty. Overall, for the FI positions, we've largely seen the FI maintain a long position, which is a bullish sentiment, continuing their long position, as well as the increased interest in markets for the Nifty options, almost roughly 30,000 crores, as well as just some short positions seen in the Nifty bank future specifically. Let's also look at the PCR. We've seen it maintain and hover around the 1.07 mark. Is largely been and maintained around the 1 mark. So that's largely a key sentiment between both those verticals, maintaining both in calls and puts at a similar level. While the index long position has moved up from 32% yesterday to 34%, and that's reflected in the previous chart as well. Finally, in terms of open interest distribution, and this is the final thing that we're going to talk about, 25,000 as a key level has seen increased call interest. We've also seen an increased interest in puts at that similar level now that the range has narrowed for the trading in the Nifty as well as the bank Nifty. 25,500 is another level that's been largely maintained as an out-of-money call option. But again, today will be another day, could possibly be where there is trading in the narrow band, and a lot of stocks could react to earnings as well as news specifically.